Welcome to a new update. Today it is again a day where Bitcoin is at 26k. It is still down 70 to 80% from the all-time high. So how can you trade in the markets nowadays where there are also altcoins starting to break out? So what are we going to do in this update? We're going to discuss the TA on Bitcoin. What are we expecting? Are we going to see a further fall of the price of Bitcoin? How am I trading the Bitcoin price action at this point, and where are we going to see altcoins move from, and how am I actually activating the trades that I do? So that's what we're going to discuss. Now, if you like the content, make sure to hit the subscribe button and like it as well. It doesn't cost you anything, it helps me a lot, and it also helps you getting notified if there is a new content coming up, as we're going to give you a lot of content, especially in the current markets. Then the markets are currently very, very boring. But is that actually the case? Because what we see lately is that altcoins are breaking out slightly, and the altcoins update will be on Saturday, where I'm going to discuss with you what I'm doing with my altcoins portfolio, which is a swing trade portfolio, which is underwater because Curve screwed me over. But today we are looking at the Bitcoin price. Before I continue to discuss the Bitcoin price action, we have to have an overview on what the markets are currently actually doing. So what are you doing at that point? You're going to scan the dollar, you're going to scan the indices, we're scanning gold, we are scanning the yields, and we are framing what big events are taking place this week. Then we're going to watch the higher time frames for the Bitcoin price action, and we're going to identify which levels we want to use. And then we zoom in some more. The zoomed in version you can see here already. But first we start with the overview of the markets, because today US opens up again. And when the US opens up, the rest of the markets start to move alongside with Bitcoin. So what we do is, first of all, we have a look at the most bullish asset of the past few months, which is the dollar. It is still trending up. And I've marked a few important levels here, which should be a trigger for at least some movements. Why am I saying that? Is that we've had a tremendous bullish period of the dollar since July the 17th until right now, which is 6 weeks. And we've had a case that since July the 13th and 14th, Bitcoin has been trending down. So there is not a 100% correlation between the two. But if the dollar starts to trend up, it is better to be relatively defensive on risk on assets, on crypto, as apparently crypto is having a hard time following the indices and following other assets. So what we see right now is that the dollar is trending up. This week there are not many big events taking place. PMI is coming out again. That's it. Next week is going to be CPI week. So then we're probably going to see big movements taking place. So it's a relatively boring week. In that aspect, we are probably, in most boring weeks, you probably see the biggest moves actually. Before we anticipated what we are seeing right now, we've seen a big week last week with economic data. The recession fears have been growing. The macroeconomic data has been worse. Although the last update on Friday was on PMI, which came out better than expected. And because of that, the dollar started to make a unsubstantial bounce up, as we can see here. And we have started to sweep a few important levels. So if you want to see a reversal on the dollar, this is your point that you want to start paying some interest, right? We've been going up for 6 weeks. And usually that is a period that is it's going to continue running. Here we've had a period of 34 days, which it started to run up. Here we've had a period of 47 days that it has started to run up. Currently we are into a period of 53 days that we are running up. All right. So in that case, we've got a few important highs that we're currently facing. And at least some correction is going to take place from any of the two. So if there is going to be a reversal at some point, it's either going to be at this one or at this one. All right. Which means that the other assets, if you think of this entire trend, the growth of the dollar is most likely already in, so we probably are going to have at least some consolidation before we continue to move, unless the economic data is going to be worse than expected. So a reversal, or at least a correction, is going to take place or here, or it's going to take place at the higher numbers. And what you want to see in that case is that the dollar loses 104.28. Then we probably are going to see a downwards fall. If it doesn't take place, next area is the one to watch. And then we probably are going to have more downside on Bitcoin. What we see on gold is that we had a sweep of the low. We've got this high here. We pretty much have a range. We've swept the low. We are consolidating. And as long as 1920 holds, we are going to continue the movements here for gold. When we look at the indices, pretty much the same view. There's still the recession fears at this point, but as a matter of fact, we just consolidate and there's nothing to worry. As a matter of fact, we're just having a very standard correction on the markets in which we probably continue to run towards the all-time high. And if the indices are breaking all-time high, the chances are that we are having this path and then we continue to move. So if we get towards the all-time high, most likely there is no recession taking place, and most likely the actual hiking process of the Fed is already done. So we continue to blast, and we might need the money printer to start again. When we look at the yields, we can see that we are most likely topping out relatively soon. I think we are in the process of creating a monthly bearish divergence. We might still sweep higher this month and then we finalize it. Trend is reversed, but the big majority and chunk of the run has been in. And we are going to have a case that we're going to drop south again, probably because there is going to be a big crisis or whatever. But 2 years, not much change has been made here. When we start to look at Bitcoin, and we start to look at the higher time frames, which I use the index chart here, which is the all-time history index. I'll put it on lock chart, where you can see the 200 EMA. If it is starting to show up, it's the monthly chart, then it doesn't work. Which, as a matter of fact, we have been breaking beneath here in August 2015, which was approximately 10 months prior to the halving. Then we started to run up only. We've had the exact same case here in 2019, where we broke down, then had a bounce back up, broke down again, and then we started to go up. If we erase the black swan, probably the trend would have been continuing to go up before the halving took place. Now we are into the same aspect. So we are making a correction, which is similar to the period that we witness here. September is usually Rectember, which means that currently you have to look at the weekly time frames or the higher time frames to identify which levels are important. And in this case, we've just witnessed a bounce which slammed back, and we're still holding at the 200-week EMA. I think this is the crucial area that we must be holding. If the 200-week EMA is going to be lost, we can still have a dip in this entire green zone, which I think is also very beneficial to hold. I think these two ranges are pretty much by the dip ranges. I think at this point, people are looking at 20k as if that is going to be a secure case, and that's going to be the obvious level where we're going to take the buys from. I think that if we lose the 200-week EMA for sure, and that is being held up right now, and we lose it and we can't regain the level, yeah, you can. I can assure you that we're going to have to test here, and that's probably the final crunch. Maybe because Binance is getting sued by the SEC or the DOJ comes along, or we're going to have more strength on the dollar that we just discussed. That's the area where I want to buy my investment thesis, right? Now, when we look at the lower time frames, the weekly on Binance is not showing the exact same case. But if we're looking at the lower time frames, I can identify the strategy that I want. We've got a breakout here, and we discussed that if we are going to have a sweep of the lows, that is where I want to start punching my longs. All right. So we had this breakout. It was actually after I placed the tweet already. We broke up, and then I wanted to see a support being held at 26.8 to 26.5, which we just fell through. So then I become conservative, which we had to sweep here, but preferably we still have these two lows being taken into account, which means that if I want to take a position, What I want to see is that we sweep into these lows during the week, and then during the week also regain the level that we witness here at 25.8, and that is my trigger for longs. Or if we have a sweep in that zone and we get a higher time frame bullish divergence to be played out, that's going to be a trigger for me as well. So I would be saying that around 50 to 60% we are bottoming out here. There's also a case of like 20 to 25% that we go to 23k, and to 20k is another 20 to 25% at this point, especially since this sweep has been taking place. So in terms of investment thesis, if I get the confirmation here and we start to crawl back up, I use my DCA strategy to just continue buying. If we hit 23, if we hit 20k, I add to my investment thesis. In trading perspectives, if we clearly break 26.3 to 26.8, that is to me an aggressive breakout play. Otherwise, I'm only interested when we sweep the low at 24.8 to 25.2. Now, where do I trade? I do trade on Bybit, and Bybit is my go-to partner when it comes to derivatives trading on Bybit, on crypto. So during this entire month, if you sign up through my affiliate link, you get $20 for free if you deposit $100. You get $40 free if you deposit $300, and you get 15% fee reduction for 2 months if you start trading through my link. Bybit is the one with the best fees, with the lowest slippage, with the highest volume, and most altcoins to be traded within the Netherlands. So it's my go-to place where I can still trade because Binance and OKX has left, and I think I'll be continuing to trade Bybit or use it, and that's when we can get some very cool stuff as giveaways and more for you if you sign up through my affiliate, which I think is super important to understand, that you need to go towards a secure place that is fully regulated by the licenses of the DNB, which is the case with Bybit and Satos. So then I feel comfortable by using this as my derivatives exchange. Now, what do I trade as well? I think overall you can see a lot of altcoins that are currently breaking out, which means that it's very comparable to what we witnessed in January, where we were also falling down in price action and then we started to break to the upside. So when we look at SNX, we can see that we have been continuing to fall south, get a massive bullish divergence, and then the reclaim of this level here at 150 was the trigger of continuation of an upwards trend until March. That was the first run, and since then we're just downtrending again, right? In this case, we've got a bullish divergence being played out again. We've got a breakout to the upside. So what I want to see is that we hold the level at $2 to actually activate a trade. Probably we can target higher numbers, but this is my conservative approach in which I start to look for the higher lows and then start to look for the take profits. And you can scan those around the market. So there are more of those altcoins that are probably going to follow suit. For instance, Perp is currently looking at a case where we just consolidate. If it breaks through this level that we have here at 1260, which is a little bit 13 cents, I'm sorry, which is a little bit high, I think you can start seeing that we fill this entire gap. So there are two ways of strategies in this. The first one is that you look for the flip at 13 cents and the continuation towards where it started to fall down. And the second one is that you look for the breakout already and then the retest. So in this case, you look for the retest at 13 cents and then you continue to use that as your potential trigger for longs. I hope you have been enjoying this update. I'll be back on Thursday. Make sure to subscribe. Ciao.